I will tell you, they want to desperately meet, and until they're ready to meet in a meaningful way, we have no interest. Iran cannot have a nuclear weapon. Very simple. It's a very simple dictum. They cannot have a nuclear weapon, and they won't have. They're not going to. They have no chance of having a nuclear weapon. We are degrading them at levels that nobody thought was possible. They're being degraded really so seriously.
President Trump issuing a blunt warning that every attack on U.S. troops will be met with overwhelming force as U.S. completes a 10th night of airstrikes. Welcome to the Big Money Show. I'm Taylor Riggs, along with my co-host Dagan McDowell, Lou Bassanies, Jackie DeAngelis. And with us for the hour, Fox Business senior correspondent Charlie Gasparino. Great to have you.
We've already made progress in this show because we found out that Cologne, Germany, Lou brought this up, is the birthplace of cologne.
Oh, wow. Breaking news. Okay, well, let's just get right on with it.
Inquiring minds wanted to know. It's not my idea.
All right, we're going to get back to serious stuff. Fox News confirming that the president is considering even broader military options, including possible strikes closer to Tehran or against Iranian nuclear sites. The president is hosting Lebanon's president at the White House right now with regional security and de-escalation on the agenda. Investors continue to watch the Strait of Hormuz, where disruptions are pushing energy prices higher. All right, Gaspo, you were sitting here, and besides debating Cologne, Germany, we were debating, I'm wondering, American people at home, are they feeling frustrated when they feel like they've heard that again? Or is there patience in sort of seeing this through? How do you feel?
Hardly a military expert. I'm not quite a financial expert, but I think it's good to look at the chart, look at the screen, and you see a lot of green.
There is.
Yeah.
I picked this up over the weekend. I spoke with some people that care about this, let's say CEO types and hedge fund investors. There may be a divergence between the price of oil and the markets a little bit here. Now, that doesn't mean it'll last forever, but the magic number everybody talks about, where that might turn wickedly red, is about 120 a barrel, maybe 130. If you keep it underneath there, if you're an investor out there, that green could continue for a while because of AI productivity and everything else. So the magic number for investors, I think, look at oil, 120 is the number. If you notice, remember that one freak out back in March when we started and it totally went nuts? It's when oil hit 120, when everything else started going.
Intraday on
but everything started going haywire. Bonds, you name it, yields started to spike. So that's a big number. We're not even close to that, really. I mean, who knows? I mean, I guess one bad day and right in the
But in the last 10 days since we've been striking, that number has slowly but surely crept up to this 85, and it keeps going higher.
Yes.
So I'm not actually taking the 120 off the table, not knowing where this goes.
No, I'm just saying.
I hear you on that.
I'm not saying it's going.
I think it's more likely now than if we go back to the beginning of this to go to 120, just because we're at critically low supply levels.
Okay.
Not just in the Strategic Petroleum Reserve, but Cushing, Dagan and I talked about that, got down to its bare bottom, like 20 million barrels in inventory there. You're seeing the crack spread is very inflated and widened, and that's because the market price came down before the physical price is.
And the SPR is under 50.
So I would just say, if you're an investor, those are your metrics to pay attention to. In terms of the war, I mean, listen, the only thing I could say is, as a journalist covering it, I felt like I've heard that phrase out of the president like 4,000 times. They want to come to the table. They're defeated. They're, by the way, if they're so defeated, how come they keep shooting bombs out? I mean, I don't know. Yeah. I think the biggest strategic mistake, if I was just eyeballing it, is that we didn't hit them harder during that we should have taken them like 90% out. We should have done the bridges. We should have done the critical infrastructure. We should have done it and then started to negotiate.
Well, Jackie, let me pick up on that. Trump is saying that we will be hitting Pickaxe Mountain probably very soon. He said this, I'll just read the direct quote. You're talking about the centrifuges. It doesn't mean anything unless they have the material. We follow the material. That's where the action is. We'll be hitting that area very probably pretty soon. There's not a thing they can do about it. So again, that seems again like more like an escalation. maybe to Charlie's point, rightfully so, do it and be done? Or do you feel like this is an escalation that continues to sort of carry this on for another couple months?
I can't be sure what it's going to do to duration, but I agree with Charlie that we should have gone farther before we even sat down at the table to talk about any memorandum of understanding. But hindsight is 2020, and that is behind us now. I was not a big fan of the ceasefire either, because I thought there was still more military work to be done. And the president is focusing in on that. But I get concerned because Marco Rubio also said that diplomatic options are still on the table. At this point, I think enough conversations have happened, enough broken ceasefire moments have shown us that these are not a group of people that are willing to negotiate in a meaningful way, and therefore the next steps have to be taken. But I recognize that for the president, this is a difficult thing. Over the weekend, the 2 servicemen and woman, and I believe the third person has been identified as well. And so as soon as you've got a situation where lives are being lost, and this is a president who's not going to look at his watch at the dignified transfer. He cares, and Americans care. It complicates it because there are a lot of people here that said, I did not vote for this president to have a war. I do not want boots on the ground. I do not want lives lost. He promised me that, and yet here we are. Now, on the flip side, I understand the situation he finds himself in, that the Iranian threat is a very serious threat, not just for us, but globally as well. And even if he promised something, sometimes you've got to adjust a little bit and deal with the situation at hand, which I think he's trying to do.
And now, inside the White House, there's a debate, too.
Right, with Vance. With Vance. Taking a different tack on that.
I listened to Joe Rogan. I was like, whoa.
Yeah.
I mean, that's...
I just want to say one more thing about the markets. So the markets are shrugging it off today. Oil is not shrugging it off. But Taylor, you're going to be proud of me. Check the 10-year this morning.
Look at you, girl.
Where are we?
4.
Okay. And there we go, 4.6. It was the 0.6 that got me. I forgot the first number for a second. But it's the 0.6, and I'm worried a little bit about yield. So when I try to think about bonds, I don't process it exactly the way you do. I think about what is actually happening. Investors are buying the stock market. They're buying that risk trade over buying a safety trade. They're selling treasuries, which is what pushes the yield up. And I never love when investors don't have confidence. I like to see bonds and stocks move somewhat together. I like to see investors have confidence in the U.S. And I feel like when we see these escalations, that's when people start backing away from it. And that yield, as Dagan has pointed out many times, causes a problem.
Bond traders
I want to play
remember that.
a soundbite for Dagan about the Houthi blockade in the Red Sea. Take a listen.
We take care of things. If something like that happens, we take care of it. We've done that with the Houthis before, and we haven't heard from them in a while since we did what we did originally. That was about 45 days of very powerful action we took against the Houthis. We've had no problem with the Houthis. They've had no problem with us for a long period of time, including during this conflict. I think that if there is something like that, we'll just have to take care of business.
Dagan, jump in.
He's talking about, well, the Houthis have threatened and are in the process of blockading the Bab al-Mandeb Strait between Djibouti, Eritrea, and Yemen, which essentially blockading oil, about 4.5 million barrels a day coming out of Saudi Arabia, which has been a critical way of offsetting, a critical supply offsetting the Strait of Hormuz. Trying to deal with the Strait and of Hormuz and then another conflict zone on the water. I just point to one thing we can talk about, or what are the markets telling you in terms of the cost to the American people, and a life you cannot quantify of the loss and the value. Sergeant Michael Emmanuel Swinton was the third individual who lost his life. He died Saturday during a controlled detonation at Erbil Air Base. The incident under investigation, according to the Pentagon. He had been assigned to the 108th Air Defense Artillery Brigade at Fort Bragg in North Carolina. Certainly worth mentioning that in honor of his service, and to his family, we pray and send you our blessings. But Charlie mentioned oil and the stock market. It's oil and long-term interest rates, and then how everything else reacts to that. Because it is oil triggering inflation, triggering the Federal Reserve potentially raising interest rates, and then what we're spending over there and how investors react to that as well, how much more are investors or lenders to the U.S. government going to demand in compensation because we are profligate and reckless with our spending. So the big tumult in the markets was actually in May when the CPI came out and it was north of 4%. And that signaled, because the term, like they had been bidding up longer term interest rates, lenders to the federal government, starting with this conflict, but it was all term premium. But when the CPI came out at 4.2%, it was, oh no, the Fed's going to jack interest rates and our deficit is going to explode to the upside, where it's already running at, one point, so far this year, 1.367. It's higher than it was in the previous period. So that's all related. And I'll just point to something that Strategas is saying. The 10-year yield is tracking closely to the 1973 oil embargo that we are continuing to watch, and this is from Tom Tezoris, Fixed Income Strategy. We're watching the change in the 10-year yield from the onset of the oil shock versus past shocks. It continues to show yields tracking closer to the 73 oil embargo, not Iraq's invasion of Kuwait. Bond investors may be suggesting that this shock will be longer lasting than consensus experts.
Yeah,
That does sound good.
Look, I
weigh
think that's
in.
the fear, but I mean, to Charlie's point, we're seeing this divergence in the stock market and oil today.
And bond yields.
But I think this is largely because you saw this in the last inflation prints, right? The oil coming back down brought inflation right back down with it. So investors right now, I think, are having an optimistic outlook of, hey, we're escalating. We're 10 nights in a row. We're going to go to 11, 12, whatever we need to do to get this over with. And we know, even if there's a temporary inflation because of oil respiking back
It's
to
not
90.
just the inflation, it's the spend. President Trump's
I get the
talking
spend,
about, but President Trump's talking about Pickaxe Mountain. President Trump is talking about taking on the Houthis in another area of the Middle East,
But the market's
on
not
the water.
freaking out about that.
Well, look at the
Guess the other-
10-year.
But here's the thing.
Stock market is not freaking out yet. Pete Hegseth, Secretary of War, is going to be on Capitol Hill later today testifying about our needs in terms of spending.
Defense spending is bullish for the market. Defense spending is bullish for the market.
Not if it drives up longer-term interest rates.
But what's
and
going to drive up
drives
long-term interest? The deficit or oil prices?
It's both.
Right now, the market is responding to the AI chip rebound.
Longer-term interest rates started going up at the very onset of this conflict,
I agree.
simply because of the spending on military.
Can I also-
and it was
they also
inflation.
went-
It was the
went up-
inflation from oil prices showing up in the CPI.
The second we have another
feeding
ceasefire,
through to the Federal
the
Reserve.
second we have another ceasefire, I will bet you dollars to donuts. This print goes.
Oh, you're betting on a ceasefire? That's really going to take care of Iran.
We have to
we
get to
lived through
somewhere.
that? Have we? I don't want to say idiocy. Didn't we live through that before?
You and I are in violent agreement that the shortcomings of the MOU was the fact that it gave them economic relief.
So you're
which they
asking for
used.
another ceasefire?
No, I'm asking to finish the job, and that's why the president is going 10 nights.
How much is it going to cost?
I will just say.
How much is it going to cost?
I would just
Cost
say
whatever
one
it needs
thing.
to get the job done.
Let me quickly just throw something in the pot. And I'm asking this respectfully. Some people would say, and I understand 4.6 feels high, but in terms of like the longer term averages,
Not
when
horrible.
we remember Greenspan, the 10, the 15%, does 4.6 feel like we're
The only
spiraling
thing I
out of
will tell
control?
you is that bond investors are supremely much smarter than the stock market.
Aren't they
You
also
see-
more negative?
Yes.
Inherently?
Often,
Yes.
but they often smell this stuff a lot sooner.
Right, so this
I
is
saw it with
concern,
every
not panic right now at 462. It's
the
concern,
fact-
not panic. I'm
you
not
see,
saying ignore it.
The stock market is diverging from the bond market right now, and you have bond investors saying X, you have stock guys say Y. I did talk to somebody that runs, let's just say, a major financial firm that invests in stocks, but his background is in bonds. I don't want to say exactly who it is. And he's the guy that told me the 120 number. Okay, so now he's a bond guy. And he told me that. So he's more worried about this market coming apart when oil starts. And he wasn't freaked out about a 4.6 on the 10-year just yet. But clearly, you have a debate. And I always err on the side of bonds, just so you know.
I mean, when this started, Jackie and I both said the danger zone is whenever oil breached 100. We didn't see it getting there. Then the 120 becomes that's an automatic depression on economic growth globally. And now I would say we're more vulnerable than we've ever been because supplies are so critical, right? You're talking about now the Houthis now cutting out another 4.5 million barrels a day. What scares me is the 10-year average of what was going through the Strait of Hormuz was only 4 million barrels a day.
We can say 4.6 on the 10-year isn't that high, but we have never been paying $117 billion a month in interest on the debt. So any move on rates, particularly anything that would push the Federal Reserve to hike short-term interest rates, is a death knell.
There's no chance of the Fed hiking rates.
You sound like
that came off the table.
You sound exactly like Nouriel Roubini. I'm telling you, that was literally his thesis as to why we were going to have a financial collapse.
But
and you know what? We got a collapse for something totally different.
Right, but we were not in the middle. We didn't go to war at a time when we could not afford it.
I don't know. We were in war, weren't we?
We never really can afford it. But I just want to say this about the Houthis. Obviously a proxy of Iran, and that is why I have such a problem with the ceasefire and the MOU, because the funding that they were able to amass during that time period allows them to continue to pay their proxies to cause trouble. And I mean, it doesn't take a genius to see how that works. So it was maximum military pressure and maximum economic pressure. And when the economic pressure pulled back is where we lost our leverage.
We haven't even mentioned China. Enemy, not adversary, not competitor. And what is China's role in supplying drones to Iran and propping up Iran and all of this?
Absolutely.